Hi, good evening, everyone. Thanks so much for joining tonight's Corporate Connect. My name is Gerald, and I'm happy to be your host for tonight. For tonight's session, we are very pleased to have with us Pan-United. Joining us today is also the audience from Mumu Live. This webinar is organized by SIAS and supported by the SGX Group. Okay, what we'll do today is I will start with a short market update. Thereafter, we will have a corporate presentation by Mr. Jim Tay, who is the Group Head, Corporate Development of Pan-United. For those of you who might not be familiar with Pan-United, they are actually Singapore's largest concrete player. From major projects like Jewel Changi Airport, Terminal 3 and 5, the Cross Island Line, as well as Thomson MRT Line. This company is actually responsible for some of Singapore's largest construction projects. They have close to 40% market share in the Singapore concrete market. So we are very pleased to have Jim sharing some of the updates with us today. And thereafter, we also have a Q&A session where we hope to have your questions for the company. But before we go into that, I'll just share a quick update on the market so we can all be updated as educated investors on some of the developments. Okay, so I'm going to share my screen. Okay, so if you have been following the SIAS Weekly Market Review, you probably would be getting the updates from myself as well as Sunny. But what I wanted to spend some time today on is just to look at what are some of the macro developments as well as longer-term trends in the Singapore market. Okay, as usual, the sharing is for information purposes only and should not be taken to be financial advice. Okay, so for those of you who have been following the Singapore market, and especially if you're shareholders, you probably have noticed that the Singapore market has done well this year. Okay, the STI is close to a 52-week high. When I just checked, it was close to the 3,340 level. Okay, if you look at the last time it was at this level, it was in July, like close to 3,380. Okay, so close to the 52-week high. And we get a lot of questions as to what is driving the strong performance of the Singapore market. So that is what we'll try to understand today as to what is driving this strong performance. Okay, first and foremost, we'll look at the macro backdrop. I think if you are looking at the trend since the start of this year, we have seen US government bond yields climbing. This is because of expectations that interest rates may remain higher for longer. Okay, what we have seen is that the inflation has been a lot more persistent than previously expected. And with that, the Fed might not be able to cut interest rates so quickly. Okay, so if you look at the 10-year US government bond yield, now at about 4.5%, at the start of the year, it was below 4%. Okay, next we can also look at expectations on the interest rates. Okay, this is the CME Fed Watch tool that we commonly refer to. At this point in time, there's just one rate cut expected this year in September. Okay, if you look at this chart at the start of the year, there were up to 7 rate cuts expected. Okay, so effectively, investors have tapered down their expectations on potential rate cuts. Okay, so what does this actually mean for the Singapore markets? We have seen Singapore banks performing very well. Okay, DBS up by about 18% year to date, OCBC 11%, UOB 7%, and that is above what the STI has done so far year to date. Okay, so the higher for longer interest rates generally set up a positive backdrop for the Singapore banks. Okay, how does that actually happen? First and foremost, it will help with their net interest margin. We have seen the net interest margin of the Singapore banks climbing. And in the last quarter, they have remained steady. Okay, so DBS at 2.14%, UOB 2.02%, and OCBC 2.27%, flat from the previous quarter. Okay, with this, the Singapore bank's returns have improved. DBS at an all-time high ROE of 19% in the first quarter. Okay, UOB also saw sequential improvement in the ROE, and likewise for OCBC, interest rates has translated into better net interest margin as well as returns for the Singapore banks. Okay, so with that, the Singapore banks offer a fairly attractive dividend yield as they have actually improved their returns and pay out this to shareholders. Okay, so when I last checked, UOB offer a dividend yield 5.6%, OCBC 5.8%, and DBS 6.1%. Okay, if you were to look at some of the more recent developments, just in the past week, we saw the STI doing better than the US stocks. The S&P 500 was down by 0.5%, and the STI was up by 0.6%. What is driving this strong performance of the STI? We saw that there were a few stocks that actually did very well last week. Yangzijiang Shipbuilding was up by 20%. Seatrium was up by 14% and SETS by 9%. Okay, so these stocks effectively lifted the performance of the STI. Okay, we'll go through each of these stocks in a bit more detail. What we saw for Yangzijiang Shipbuilding is that they have continued to win a lot of new orders. Okay, so this has helped to boost their order book to a record high of 16.1 billion. And if you compare that to the COVID level, COVID in 31st December 2020, it was just at $3 billion US. Okay, so it has increased over the years, and that has helped to drive improved sentiment on Yangzijiang Shipbuilding. Next, we have Seatrium, also did very well last week. What the company announced would be contracts for 2 floating production, storage and offloading units worth 11 billion by Petrobras. Okay, so these are oil production units that help to produce oil from the oil field. Okay, with this, the net order book for Seatrium is at 25.8 billion, and they will progressively deliver these projects until 2030. Okay, next we have got SETS that reported their full year results, also doing very well. Billion from 2 billion in FY 2020. In terms of the net profit, okay, SETS has turned around from a loss in the previous fiscal year to making a profit of 56 million in the most recent fiscal year. Okay, so part of this is driven by the acquisition that they did of WFS, which is the largest cargo handling company globally. Okay, if you are looking at the STI from a longer term perspective, okay, this is what we see for the STI. If you dollar cost average into the STI, it has generated a 4% CAGR from the 5 years starting December 2019. Okay, so while the STI performance has been flat because of the attractive dividend yield, we see that the long-term returns for the STI has still been fairly decent. Okay, so with that, I'll hand over to Jim, who will actually provide an update on Pan-United and how the company has been trying to grow its profit over the past few quarters. Jim, I'll hand over to you.
Thank you very much. Good evening, everyone. And thank you to SIAS and SGX for having us here today, this evening. And always good to see you, Gerald. Yeah. So let me start off as broadly. I'll do a short intro of Pan-United later, what we do, and how, more importantly, how we transform as a brick and mortar business. Again, after that, I will spend some time to articulate why we believe that we can play a role, a big role in the decarbonization of the built environment. And last but not least, I will just go through our financials for last 5 years on our financial performance as well as our position. Okay, so to start off, Pan-United is actually a very old company. We have a long history that started since 1958. We were listed on the SGX since 1993. As Gerald said, our core business is in production and supply of ready-mix concrete. Presently, our geographical footprints encompass Southeast Asia, primarily in Singapore, Malaysia, and Vietnam. Our mission is to be the global leader in low carbon concrete. And I'll explain a bit further later why we say that. For those that's not familiar with concrete, I will give an overview that concrete is not cement, right? Concrete basically derived from 5 key materials, which is cement, ordinary Portland cement, aggregate, sand, water, and admixture, which is chemicals. And these 5 elements are imported into Singapore and will be transported to the various batching plants around the country, which will be mixed and produced in various designed, and then will be delivered to the construction site. Right. So basically, that's ready-mix concrete. In our business, we are very vertically integrated. In Singapore, the cement are all imported, and hence we have to have our own silos and it's at the Jurong Port. We have 3 silos altogether that constitute about 24% of the total capacity in Singapore. However, we are the largest cement supplier in Singapore for our own use as well as for others. Right. We also partner with a major Japanese cement manufacturer as well as a trader in our business. On the upstream side, we have invested in a slag grinding plant, what people call green cement. Basically, is the byproduct from the blast furnace steel. It's called granulated blast furnace slag, and this is situated in Johor Bahru. Right, we started the commercial production in 1st January 2018. Yeah. So in the downstream part, in the ready-mix business itself, we are obviously the largest player in Singapore, and we have about 40% market share. We have also business in Malaysia in 3 major cities. One is in Penang, KL, as well as Johor. Johor is doing very well recently. And of course, in Vietnam, we are only based in Ho Chi Minh. All right. So maybe a bit more of where we are today. So over the years, we have been transforming and innovating. Our business, well, is a brick and mortar business. We always strive to invest and transform the company. And over the years, there are 3 key areas that we're looking at. One is product innovation. As I met Gerald last year, I told him 8 years ago when I was a banker, I always say that concrete is a gray matter. But in Pan-United, we don't see concrete as such. Yeah. To us, each concrete that we supply has its own uniqueness. And why is because we invest in research and development. We have a whole team of in-house material scientists and engineers that help us to develop various types of concrete. Today, in our portfolio, we have over 300 highly specialized concrete solutions for our customers. And I mean, just to give you a bit of example, in the Jurong Port or in the marine business or Tuas Mega Port, we actually develop specialized concrete to prevent changing types, to prevent sea waters. In the healthcare sector, we work closely with MOH, for instance, the National Cancer Center, where we develop specialized concrete to shield against proton and radiation rays. In aviation, we are a very big part of Changi Airport, such as Terminal 3, and we hopefully will be Terminal 5. We even patent a concrete that able to withstand heavy loading of the large airplanes coming in, right? And of course, as I mentioned, which I'll spend a bit more time, is that we continuously develop sustainable, green, and low carbon concrete in our business. And we see that is substantially a big future for Pan-United. The other part of it that which people don't see is that over the years, we look at concrete need to be overlaid with technology. How we transform the business through process innovation and using technology to enhance how we do our business in all forms, right? From coming from raw materials, coming in to how we make our plants most efficient, to delivering the finished products to the customers, as well give us the customers various customer experience such as online data and so on and so forth. So we have developed our in-house optimization technologies platform or solutions primarily, which we name as AIR. And the reason being is that we are unable to find a service provider that can do it for us. So over the years, we continue to develop this, and we name it as AIR, which is called Artificial Intelligence for Ready-Mix Concrete. And it's our in-house platform that we should develop over the years. And from all this innovation over the years, we decided recently that we may create new business and monetize the intellectual property and domain knowledge that we have. And one of it was we started a company called Air Digital Solutions. And primarily, this business is to provide technology solutions to the cement and ready-mix concrete sector, as well as the logistic and distribution sector. The good thing about this and what differs from other service providers that we are the one that knows the business, and we are providing that solutions to people outside that using the same solutions. At the same time, is able to coexist and integrate with the existing systems. So basically, that's how we've been transforming over the past 10 years. Right. I'll spend a bit more time on something that we are very passionate about. Basically, we are looking at how we at Pan-United play a big role in decarbonizing the world with concrete. And let me start with why we think this is important. Basically, carbon emission in the built environment is a huge thing, right? People may not see it, but actually in the built environment generates about 40% of annual CO2 emission. Unfortunately, the production and use of construction materials are responsible for 23% of global CO2 emission. And to add that, the cement production itself accounts for 8 to 10% of the global CO2 emission. And if you remember my first slide, concrete or ready-mix concrete, one of the biggest elements is actually ordinary Portland cement. And hence, we believe that we can play a big part in decarbonizing the built environment. So the next slide, I will just articulate why is that. In a building, a whole life carbon of a building, everybody is familiar of operational carbon, where a carbon is being emitted in the operational life of a building. And that comes from lighting, energy usage, chillers, and so on and so forth. And people putting in renewable energy, solar panels, to reduce the carbon emission of the operational building. However, what people may not understand that only constitutes 43% of carbon emission of a particular building, whereas 57% of it are derived from what we call embodied carbon. And that comes from the construction of the building to the end of life of the building. For instance, as I mentioned, the raw materials that are used to build the building, such as cement, concrete, glass, steel, the construction activities in the construction sites, right? Having the cranes, having the transportation, having the wheel loaders, and so on and so forth. The repair, the refurbishment, the replacement of parts in the building. And last but not least, the end of life of the building, where is construction, the demolition of the building. And the thing is, the emission of this all these emissions of the carbon in the embodied carbon are all locked into the building. You are unable to reduce it from day one, as long as it is incorporated inside the building. Whereas operational carbon can be reduced over life, whereby you put in more efficient air cons and so on and so forth. So that's why, because in our core business of ready-mix concrete, we believe that we can play a big part in this. And how we can do that, right? So in looking at reducing embodied carbon, again, we're looking at the two areas that we're looking at our innovation, both product innovation and process innovation. Number one, we look at sustainable raw materials. How I mentioned just now, cement or Portland cement constitute 8 to 10% of the global carbon emission, and how we at Pan-United able to try to reduce the consumption of Portland cement, right? We replace natural raw materials in our production of concrete, and we're using what we call, and we invested in it in the slag grinding plant in Johor, which is a GGBFS, ground grinded blast furnace slag, and it's a byproduct from blast furnace steel plant. We also use silica fumes, and we continuously source for other raw materials that are able to replace the ordinary Portland cement consumption. Again, we also invest in technology, sustainable environmental technologies in our business, such as incorporating carbon capture, utilization, and technology in our business. We invest in low carbon concrete technology, and we, as I mentioned, we have continuously innovate to create low carbon products in our business, such as PenU carbon mineralization concrete, whereby we inject CO2 that is carbon captured by the supplier of CO2 and inject it into production of concrete. That itself will able to reduce the consumption of ordinary Portland cement. And of course, we have other PenU green and so on and so forth. Last but not least, we continue to work with like-minded stakeholders, such as developers, contractors, and our authorities. And I would say that in Singapore, the authorities have been very forthcoming and being very encouraging in these areas. And we can see that it's from Tuas Megaport to JTC, Semicon Space, and even LTA, where sustainable concretes are spec'd into the usage of a development of MRT these days. The next part, how we reduce embodied carbon, is through our process innovation. Basically, using technology to reduce the consumption of resources and waste. When with technology, we are able to make our trucks, our plant more efficient, and hence that will reduce the consumption of energy, manpower, and so on and so forth. And that will itself will reduce the carbon emission in our business. We also use new technologies such as AIMS, whereby it enables to lower the concrete rejection in our business. The last but not least is what we call waste upcycling. Basically, in our business, there's always leftover concrete that's not used, and that will be immediately taken back into our plant. We have two plants that recycle that into recycled aggregate concretes. Concrete aggregates, whereby we reuse in a production of our concrete in the future. And of course, water is a rare commodity where when we wash the trucks and so on and so forth, those water is recaptured and reused again in our business. Right. So the next slide is basically a slide that I like a lot, and you can see that in our website, infographics of where we are participating in sustaining the smart cities in Singapore. I said, I always like to say that it's a gray matter, but for us, we can see Pan-United in all over Singapore, from the west side at the Tuas Megaport, where we supply carbon mineralization concrete, We have a MOU signed to supply 360,000 meter cube for 2.5 years. Layman's term, that take out about 24,000 cars from the road, for instance, in carbon emission. We participate on the east side, Jewel, Terminal 3, and of course the runways, and of course in other parts of the development of Singapore. Right. So yeah, I like this slide a lot. Okay. Let me move on to financials. This will be quick. Basically, what I would say that we are blessed in the sense that we went through COVID, and our profit came down to 1 million with a EBITDA 28 million, and we work hard, and we managed to bring the company together. And today, last year, we closed at 68 million EBITDA at a 36 million PATMI, with a revenue of 774 million, which is more or less the same as before COVID. The main contribution of business is still primarily in concrete, right? With the EBITDA, we were able to generate cash flows over the last 4 years. Actually, our cash generated last 4 years was about 220 million, if you're not mistaken, of which 100 million was used to settle our debt, and hence that will help us a lot in a high interest environment, and bring us out our debt as at 31st December 2023 of 0 or no gearing. The other part of the debt cash generation was used for our capex and recurring capex, and last but not least, also for dividends. Yeah. And back to dividends, a bit of snapshot on our dividends. Yes, we can see that our dividends was low in 2020 because of COVID. We pay out about 5.6 million. Last year, we came back with a dividend of 16 million, and that translates to about 6.1% dividend yield based on our market price close at 31st December. Yeah. Thank you very much.
Hey, thank you, Jim, for the sharing, and good to see how your EBITDA has grown over the years, and especially since the last time that I spoke to you.
Yeah.
Okay, so maybe just to share with the audience today the outlook for your business. I think that's what some of the participants are interested in. We have seen the improvement in EBITDA, but how do we think about the outlook of your business as well as the demand for concrete across different segments?
Oh, thank you, Gerald. My colleague will share Yeah, I'll share the slides. This is the BCA numbers. Basically, if you look at what we last year, 2023, the contract awarded was about 33.8 million, and we can see that this year the numbers will be around 32 to 38 billion. Sorry, and the key increase will be in relation to civil engineering and commercial sector, right? Whereas the rest maintain more or less the same, with some decrease in private residential. On the concrete section, last year went up by 5.1%. This year, the volume of concrete will be around 12 to 13 million meter cube. So we believe the numbers are still reflective on a month-by-month basis, right? Maybe the next slide will give you a bit of a better to answer your question better. If you can see this chart, there's two parts of it. One, the bar chart actually is the contract awarded. The red line is actually the progress payment, which is actually the actual work done for the year, right? So if you look at it, actually the progress payment, the work done actually surpassed the contract awarded in 2022, around 2022 and 2023. And the reason being is that, to be fair, there was a lapse because of COVID, right? And unfortunately, the cost of doing business increases. Hence, that's why if you do a 10-year line of contract awarded line, you will see a 10.5 billion type number. But this year, the BC have announced a 34 to 37 billion. So the government, the BC have already acknowledged that the inflation has set in. And hence, the 30.5 billion number doesn't work anymore. Right? Sorry, I mean 30.5 billion number of the last 10 years. So now, if you look at the 2024 number, you will see a 34 to 37 billion. Is it correct? Yeah, 34 to 37 billion progress payment with contract award of 32 to 38 billion. Right. So there is quite a reasonable increase in both contract awarded and progress payment.
Okay, thanks so much for sharing the outlook. I think that really helps to kickstart the whole Q&A session. So for participants who would like to ask questions, you can go to the Q&A box and type in your questions. For audience who has joined us from Mumu, do click on the link to join us on Zoom and to post your questions, okay? We'll try to answer as many questions as possible. So we'll start with some of the pre-submitted questions. I think earlier we talked about the outlook. You also talked about inflation. So there's this question relating to cost, okay? How do you manage rising construction costs, and how do you go about managing also rising dormitory costs?
Okay, for us, dormitory is not a big thing, but more of the cost of doing business. I totally agree. And that comes in human costs, raw material costs, energy costs, electricity costs, so on and so forth. How we manage it is, number one, we leverage on the technology that we have invested, and hence that will help us save on or basically give us more efficiency in running the business, right? Increasing the efficiency, the output per unit without minimizing the cost increase. But that doesn't really have every impact. We still need to absorb this cost increase. And the only way that we can do that is provide value to the customers. Right. So there's no choice, but we have to go to the customer and say, provide them this value added or services that we think that enhance that will give us the margins, maintaining the margins that we have today.
Okay, I think relating to that, since you mentioned about providing value to your customers, there's this question by our participant, Chu, around what are the barriers of entry in the industry, in that how are you better able to also provide this value to your customers in a way that maybe some of your competitors are not able to?
I think one of the key barriers to entry is basically innovating and providing products that is different, right? And work with the customers, right? You know, in Singapore, the basic concrete is called G40, right? But will we be able to go to a customer and say, you want G40, but we give a low carbon G40, low carbon concrete G40, similar strength, but you can tell the building is low carbon, for instance. And obviously in Singapore, people will want that, right? So that's one. Secondly is, of course, while our business is not a cement business around Asia, but still the cost of investment is quite critical, because the plants that's coming up now these days are more integrated and bigger, and that will also have cost of investment, and not everybody will want to invest on that, right? And because we are in this business, we have no choice. We must invest in it, and that will all be one of the key strengths that we have, right? And last but not least is, of course, technology. We provide the customer experience that you want. You know, you're a customer of Pan-United, you will have online data at all times. For instance, you know whether the trucks is here, why the truck's not here, how much have been poured to your sites. So, and building is flawless. So things like that gave us an advantage on how we do the business.
So relating to that, can you just share who are some of your key competitors in low carbon concrete?
I would say that, to be fair, there are basically, I don't not name names, but basically three larger players in Singapore that runs about total about 85%, 80% of the concrete market in Singapore. And I believe that all would able to provide the low carbon concrete, right? The question is that, I mean, for us, we believe that we can provide better solutions or provide better service and so on and so forth. Yes.
Are there any ongoing regulations to encourage developers to be using the low carbon concrete?
Oh, yes, yes. So for instance, recently, LTA have come in to spec the MRT lines to use sustainable concretes. They are talk about usage of GGBFS, usage of carbon mineralization concrete, right? Things like that. Like for us, we invested in it. We invested in carbon mineralization concrete in 2019, and we got our approval from BCA in March 2021 to be able to use in Singapore. So we have to invest. You get what I mean? Because BCA won't let you use a new type of concrete tomorrow by virtue of people assuming it can be used in US, right? So while I won't say a barrier, but we put a lot of effort in sustainable concrete technologies, yeah, and we hope to be always in the forefront of that.
How about outside of Singapore? What's the reception in other countries on your low carbon concrete?
I will be happy to say that the developers, especially like-minded developers, are participating substantially. I mean, just to name a few, today, CapitaLand, Keppel, Singapore-centric companies in Ho Chi Minh are championing as well. And we're lucky that our colleagues there are also working with them, you know. So things like that, it's become very fungible in the sense that we are able to provide that service as well, right? But outside the Singapore context, I would say that it's inevitable that customers are slowly looking into that. Let's say, for instance, precasters in Malaysia moving the assets or the product to Singapore. They have to also slowly look into that, or required to look into that, because they're supplying to Singapore, right? Malaysia itself, if a developer like Lendlease, they will also ask for that. So it is slowly trickle, but we can see the traction is quite robust.
Okay, so relating to foreign countries, this pre-submitted question by someone who has probably done quite a lot of homework. Recently, UK discovered a way to recycle old concrete from demolished buildings. I've not heard about it myself. So what this participant wanted to know is, how is that different from your technology, and would that affect your company's prospects?
Oh no, I would be very happy we can. I mean, okay, my title is Head of Corporate Development. So basically, I also runs the corporate strategy board. And I've been meeting companies personally, or with to look at sustainable technologies. And I mean, on M&A angle, I don't mind looking at investment in such technology as well. Okay, to answer that, today in Singapore, I mentioned in our slides, we recycle the leftover concrete from our trucks, right? And what it means is it's exactly the same thing as today. If today there are pavement that need to be repaved, and it can be taken out and it can be recycled. Okay. The problem about buildings is that there are foreign elements inside, like wires and plastics inside the wall, right? That's where is there a technology, or is there a way to extract that out, right? Because end of the day, the standard, well, we just call sand and aggregate. There is a measure of standard on those materials when we mix with concrete to put it in our home, right? You get what I mean? So that is the fundamental part. But I would think that For us, any sustainable technology is always welcome. And I will also welcome if I can even participate in it, for instance. Yeah.
Okay, thanks for explaining that. Earlier you shared the growth in the demand for some of the construction activities, and I think you mentioned that civil engineering is one of the growth areas. Can you maybe share with us what are some of the projects that are going on within civil engineering?
Oh, okay. In terms of civil engineering, the key projects that we are looking at moving forward, obviously, is the North-South corridor and as well as the MRT lines, continuous MRT lines. Tuas Megaport will continue, right? The east side development is going to be huge. Not just Terminal 5. Terminal 5 is already going to be very big. And I think that will be accelerated because of COVID, right? It was held back, but because of post-COVID air travel and the way Singapore have positioned itself, right? We can see that that is to become an important element to accelerate. But beside the Terminal 5, there are also the East Changi development area, which incorporate aviation hub and so on and so forth, right? So, well, Singapore, there's a lot going happening right now. Yeah, and of course, Paya Lebar, which is already decided. When that moved to Changi, then the whole develop Paya Lebar again. Yeah.
So related question from Andy, who is our participant today. How does Pan-United benefit from the new government reclamation of Long Island that was recently announced?
There's no specifics today, right? I think, but what I can say that whether it's Long Island or even embodiment, due to climate change, we will be there. You'll be there, and we are developing products to participate or to with the government or to work on that basis. Long Island is an area, right? There are construction from residential to infrastructure, yeah, to land reclamation. Things the land reclamation also requires slag cement, for instance, right? So there are various areas that we are participating on, and we will because of our size. Yeah.
Okay, since we are on the topic of sustainability, you have announced a partnership with Shell-backed Cleantech Solar. Maybe you can share about how this will contribute towards your sustainability goals and what do you expect to come out of this partnership?
We just signed an MOU recently, and basically is with Cleantech Solar on renewable energy. We have solar panels been incorporated in our building in Singapore, and also we are going to incorporate that into the slag grinding plant in Johor, right? And I hope we don't stop there, because we hope that we'll continue to incorporate more solar panels or renewable energy into that. For Shell itself, there are other areas that we'll continue to talk about, to the extent of whether do they generate carbon capture, CO2, which we can use in our production of carbon mineralization concrete. So it's quite wide. It's quite wide. Yeah, but most important is like-minded stakeholders sit down and continue to look at innovation and where we can work together.
Since you've been talking about this innovation quite a number of times during tonight's webinar, are there other initiatives that Pan-United is working on apart from this MOU with Cleantech Solar?
Not at this. I mean, there are various ones that we're looking at. I mean, but we will have to see when we announce it. Yeah, but we have been continuously looking at various sustainable technologies around the world, whether with higher learning universities and sustainable technology companies and so on and so forth. But we will announce when it comes.
Are there any announced initiatives that so far had a significant impact to your financials, or that your clients are actually very receptive towards the technology that you're bringing to them?
Well, we definitely like the carbon mineralization concrete that we announced that in 2019 that we will look into it, and we got it approved in 2021, and today it became a receptive product in our business. Um, I can't quantify. I won't be able to quantify the number to you, but it definitely generate the revenue and the P&L in our business today, for instance. So that's one of those examples that we can see, right? But not just carbon manufacturing concrete. There's also other low carbon concrete that we look at, right? Yeah.
Okay, so since we've been talking about some of the positives, including the outlook for the industry, maybe also talk a bit about the risk. What are some of the key risks that you see to your business over the next 12 months, as well as in the longer term?
Our key risk, one of the key risks is actually, of course, um, um, uh, the ability to able to collect back our receivables, right? So we can see over COVID period, there are a lot of customers that has been affected, right? Some customers got stronger, some customers got weaker, and those some of the contractors where they have high leveraged or invested in other areas beside their core business and in a high interest environment are suffering, right? So the risk is always in able to evaluate the customers and make sure that we are safe, because our business is a very high, quite thinly margin business, and we cannot afford to unable to collect our receivables, right? The other part of it obviously is cost of doing business, is what you mentioned, right? The major impact have happened, I would say, last 2 years. But one of the key areas is actually manpower cost, which I don't think that will subside. That one. We have to continue to upskill our people, and obviously make sure that we able to enhance our product to able to absorb this cost increase. Yeah.
How about in terms of market risk, that do you foresee anything that might pose a risk to general demand over the near or medium term?
Based on the forecast of BCA, I think in the immediate, the mid-term 2 to 3 years, I think the market will be fair, unless there is a major geopolitical risk happening again, right? And that will I mean, that will become very unpredictable. And this one, I mean, I didn't mention that, but actually geopolitical is a risk by itself, but that affects everybody, right? So it doesn't mean to us ourselves, right? But if all being equal, based on the numbers that was announced by BCA in January this year, and the development that's ongoing, we foresee that the construction sector will be quite stable for next 3 years. Yeah, I think that would be fair to say. Yeah.
Okay, we'll spend the last few questions maybe talking about your financials. I think you mentioned earlier that you are now in a good balance sheet position. You have increased your dividends over the years. You're investing into technology. So how do you think about your capital allocation between your growth initiatives, potential M&A, as well as payout to shareholders? Because I'm sure all the participants today will be very happy if you are able to pay shareholders a higher dividend.
Sure. I think I'll put it very how I look at share capital allocation. Last year, I think we generated about 68 million EBITDA, right? So using that cash generation, the first thing I will look at is I need to reinvest or invest into capex or recurring capex to continue to generate this cash. And this is very important, right? And for this year, we have to invest more capex, yeah, because last 2 years was a bit low, and because of Jurong Port comes up, and therefore that will incur more capex, right? So that's one capex portion. After that, we will use the remaining cash to primarily to pay off whatever debt repayment that we need to do. While we're in zero gearing, we still have commitments on term loans and all that, right? And these liabilities, right? And from there on, then we'll go into return to shareholders, unless there is a opportunity that came about, like M&A and or investment opportunity that comes about. Right? So the thought process has always been cash generation, invest in people and capex to continue to generate the cash, and then goes into of course we have retired our borrowings quite significantly, right? But if 2 years ago you meet me, I'm still sweating to retire the debt, and I think we did quite well, because if you're not financially resilient today at this interest rate environment, it's going to be very tough, yeah. So I think we are quite lucky that we're able to do that, and then today we can look at other areas of M&A and all that if that's available. Yeah.
Does Pan-United have a dividend policy?
Yes, we do. Third of our P&L.
Okay. So I guess that is based on the underlying profit.
Yes.
Okay. And since you mentioned M&A, what kind of opportunities do you see for M&A activity? Is it across geographies? Is it in adjacent businesses? Is it in new technologies?
We don't have any at the moment. Once in a while there'll be one around be coming our way, and we'll look at it. But we don't have anything at this point of time. But I said we are always open to look at areas of technology in terms of our business, as well as sustainable technologies in our business.
And maybe as a final question, so for participants who have joined us tonight and think about where Pan-United might be, say, 2 to 3 years down the road, how do we think about Pan-United as a business?
I would say that Pan-United, if you look at it, it's not a brick and mortar business. That's something that I think I personally feel is quite sexy in a sense, right? It's a business that everybody needs. Concrete is always an everyday life, but the company that has long history but continue to innovate, the culture of innovation, and this makes us very different. And the innovation goes towards both technology and sustainability, which is inevitable in our daily life. So that, I think, makes us different.
Okay, so I guess maybe the next time we are stepping into a building, be more conscious around the concrete that is being used in constructing the building.
Thank you, Gerald. I know you heard me saying this a couple of times, right?
Yes, that's right. So over the past 1 year, I've been more conscious when I go to make sure that I'm aware around the thought process and technology that goes behind it.
Yeah.
Okay, so thanks so much, Jim, for your sharing tonight. And for the participants who have joined us, we hope you found this Corporate Connect informative. If you've got any other questions, please feel free to contact the investor relations of the company. Okay, in case you missed any part of tonight's session, you can actually rewatch the webinar on SIAS Facebook as well as YouTube channel. Okay, so for those of you who are not familiar with Corporate Connect, it is SIAS monthly webinar. And do visit the SIAS website to get updates around what would be the upcoming investor education events. Okay, so thank you so much for joining us tonight. I hope you take care and have a very pleasant evening.
Thank you, Gerald. Thank you, and SIAS.
Thank you, Jim. Thank you.
Thank you. Catch up. Bye.